At the beginning of this year in January, I created the video, The Stock Market Crash of 2022. And with nearly 700,000 views, it talked about the high probability of a crash coming this year and how people like Warren Buffett were positioning themselves for such an event. And well, as you know, 2022 has been a very turbulent year. Many markets now have crashed, and so this video will be an update to that video, and we'll be looking at three main things, including the three important facts about the stock market every investor needs to know, then updates to the original charts, and we'll see if the stock market is still overvalued. And then we'll finish up with what did Warren Buffett do? At 92 years of age, is he still sharp as a tack? And his results just might surprise you. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, so first up, we're going to start with the three most important facts about the US stock market every investor needs to know, as it really helps put everything into perspective. So, starting with the three most important facts about the US stock market. And number one is that corrections happen on average every single year. And a correction is a drop between 10 and 20%. So this is actually a slice of the S&P 500, and you'll notice it doesn't just go up in a straight line. There are constant corrections happening on average every single year. So a 10 to 20% drop is normal. Number two, bear markets happen on average every 4 years, and a bear market is a drop greater than 20%. So as you'll notice here, a drop more than 20%, 20%, 20%. And again, people really panic once the stock market has gone by 20%, but again, this is very common and just a part of everyday investing. And then the main thing to remember is that the US stock market has always recovered and gone on to set new all-time highs. So in its over 200-year history, the US stock market has always recovered. So three facts that are very important to keep reminding ourselves of. Now, when it comes to the S&P 500 right now, at the time of this recording, this is where it's at, and we are looking at year to date. So from January the 1st, we can clearly see a very clear downtrend here. Yes, we've had these bear market rallies, and it's actually just gone on very recently to set new all-time lows. Now, it's currently down 24% on the year, so this is just bear market territory. Now, there's no absolute definition of a crash, as it is going to be subjective. But for me, I would say on the smaller side of a crash, it would have to be at least 30% down. I'd say a significant crash is 50%. And then the big crashes that happen only every 50 to 100 years, the stock market can crash up to 80%. But as of right now, even with everything going on, it's still just bear market territory. Now, other markets have crashed. So this is the QQQ ETF, which is the NASDAQ or the tech stocks. And yes, tech stocks have crashed this year, down over 30%. And things like crypto, so this is Bitcoin, have seen a significant crash. So still down about 60%. So some markets have crashed, but the S&P 500 has still not seen a major crash just yet. So the question is the US stock market still overvalued? And so this is the Buffett indicator. As Warren Buffett said, it's probably the single best measure of where valuations stand at any given moment. And this is how it looked at the beginning of the year. in January when I initially made the first video. Now, the Buffett indicator adds up the US stock market and divides it by GDP, which is the output of the economy, adding up all the products and services sold. And it gives a percentage. Now, this goes back to 1950, and we can see going through the middle here is the historic trend line. Now, in 1970, it did get close to the 100%, and we did see a big crash. Then it wasn't until the year 2000 and the dot-com bubble that it shot up all the way past 150% before seeing the next crash, and it only recovered to about 120% before the 2008 great financial crisis brought it down close to 50%. And then this is what happened since. It went all the way past 200% for the first time, which is why so many people were calling for a crash. Now, fast forward to today, and this is how it looks right now. So we did see a big correction coming down back now to around 150%. So what this says to me is that yes, we have had a big correction, but it's still at dot-com levels. So historically, it's still very high. And a second great way to value the market is by looking at PE ratios. And this is stock prices divided by their earnings, so how much profit they are making. And once you divide the two, you get a number here. So this was the roaring 20s, which took PE ratios up to 30. So this was obviously massively overvalued. And one of the biggest crashes in all of history happened here. The next big point was obviously year 2000, dot-com bubble, went all the way up to almost 45 before a huge crash down. And this chart again is from the beginning of January, and PE ratios at the time had got all the way up to 40, which historically was very, very high. Now, fast forward to today, this is how it looks right now. And yes, similar to the last chart, we have had a big correction, but it's still historically very, very high, although it still hasn't topped the dot-com bubble. So this was clearly a very speculative time where there was many stock prices way too high in comparison to the profit they were making. So again, yes, we've seen a big correction, but I'd still say historically it is still quite high. So now we get to take a look and see what did Warren Buffett do and how did he perform so far in 2022. So this is how his portfolio looked in January this year, so right at the start of the year. His stock investments came to just under 300 billion, and he had a historically huge cash position of 150 billion, and the split being 65% over 35%. Now, Warren Buffett's quite famous for recommending to investors to be 90% invested and have 10% in cash. So this was a historically high cash position for Warren Buffett. And although it says cash, it is actually cash equivalents, as he does keep this in short-term government bonds. So the start of the year, his portfolio came to 443 billion, so almost $500 billion in value. And how does this look right now? So this is where it stands today. So his stock portfolio has gone from 293 and it's actually increased to 300 billion. But the huge difference is his cash position, going from 150 billion to almost 100 billion. So Warren Buffett has spent a huge amount of cash. He has been a buyer, and we'll take a look at the biggest buys he's done in a second. But I think one of the big takeaways is that notice that Warren Buffett hasn't been panic selling like the vast majority of investors. When the markets have been coming down, Warren Buffett has been a buyer. He's been deploying capital. So the total value has come from 443 billion down to 405. So Warren Buffett is actually down $38 billion on the year. So if you're feeling bad right now about the losses in your portfolio, just know that arguably the world's greatest investor has lost way more money than you. But do you think he's that bothered? Warren Buffett has been through 50% drops in his career. So I can virtually guarantee you, even though he's down a significant amount of money, he knows that it's just part of investing. And what's actually quite amazing is that as a percentage, he's only down 8.5%, when if you remember, the S&P right now is down 25%. So we're going to finish up to answer the question, how did Warren Buffett only drop 8.5% when the market's been down 25%? Well, let's take a look. So this was all the moves of Warren Buffett in Q1 this year. So these are all the positions that he already held, which he added to. These were the new buys that he made. These were the ones that he reduced, and this is what he sold out of. Now, to keep this video relatively short, but only include the most important information, we're going to take a look at this column. And this is as a percentage change of his portfolio. So I would say anything less than 1%, he really is just trimming the portfolio, and they're not really that important. So the three biggest things he did, this was a 5% change. So this was the biggest change to the portfolio. So the biggest thing he did was that he added 300% to Chevron. The second biggest thing was that he nearly completely sold out of Verizon. And then number three, he took a very large position in Occidental Petroleum. So we'll just take a quick look at these three things. So the number one biggest buy he did was Chevron, and Chevron is a multinational energy corporation. And if we look at year to date, when the market has dropped 25%, Chevron has gone up 20%. So this, his number one buy, was a huge win for Warren Buffett. Another huge buy was Occidental Petroleum. And if we look at year to date, remember the market's crashed 25%, but Occidental Petroleum has gone up almost 100%. So another huge win for Warren Buffett. And third and final is that he sold out of Verizon. And year-to-date performance, he managed to escape a 27% loss. So the three biggest moves of Warren Buffett in Q1 were three huge wins for the company. And very quickly, we'll just cover his moves in Q2 this year. But although it looks like there was a lot going on, if we just look at the percentage change, all of this stuff was less than 1%. So all of this really is just trimming the portfolio. His big wins came from those Q1 moves. And so what are the main takeaways we can draw from all of this? The US stock market, the S&P 500, yes, has come down from historically high levels. However, it's still just in bear market territory. So a full-on crash has not happened just yet. Remember that bear markets are actually very common and are happening every 4 years or so. And also that the US stock market, no matter how big the crash, has always recovered and gone on to set new all-time highs. Now, downturns may be scary and no one likes losing money. However, just remember that Warren Buffett, arguably the world's greatest investor, has lost tens of billions of dollars this year as well. Now, according to the Buffett indicator and PE ratios, yes, they have come down, but historically they're still pretty high, so they could be another leg down to come. And the number one thing that Berkshire Hathaway did to only suffer an 8.5% loss this year, when the total market's now down 25%, was that Warren Buffett invested in the energy sector. And I think that is what makes Warren Buffett Warren Buffett. So there you are, guys. Hope you enjoyed. Now, the next 6 months is probably still going to be very turbulent as well. So more updates to come. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.